Okay, so yesterday about the prices. And I hope as you read understand of market price, nominal price. GDP. So I told you that this is the value or the nominal value, the market value of all final goods and services produced in a given year within the domestic territory of a country. Okay, so one thing which in the yesterday's definition I have used is final goods and services. Final goods and services. So final goods and services is which is available for final consumption by the consumers. Okay, so final goods are those goods and services or those, see, when we talk about goods and services are produced and there are various stages of this production. Okay, you first procure the raw material, then you procure the machinery, then you have a factory setup, and then you process the raw material, you transform the raw material, and then there is a production. Now, after this production, there is still few stages. Still few stages like from the factory, it will go to the stockist and or the dealer or the wholesaler, and then it will go to the retailer, and then from the retailer, the customer will be purchasing. So you can see that immediately when the good service is produced, it is not directly consumed by the consumer. But it takes a lot of time or it takes a lot of stages to reach the consumer. So when the good is purchased by the consumer, then it is for the final consumption. That means it is no longer, or it will be further not used for any production process. So anything which is used during the production process, any good or service which is used during the production process is the intermediate. Good morning. Okay, so I was telling you about this. I was telling you about the GDP, which includes only final goods and services. And when you say final goods and services, so it means that there are certain goods and services which are considered intermediate, and some goods and services are considered final goods and services. Like, see, try to understand this through an example.
Ma'am.
What happened?
Ma'am, may you please use the black pen? Ma'am, this is not visible.
Okay. Yes, thank you. So you are saying final goods and services are those which are, okay, let me write again. Suppose you are talking about, say, electricity. So you are talking about electricity. And when you say electricity, what happened? Are you not getting my voice?
No, ma'am. Your voice is clear.
Okay. So electricity can be considered as final good and service on one side if it is directly purchased by the consumer. So it will be considered final good or service, final good or service when purchased by the consumer for consumption purpose. And electricity can be considered intermediate. It can be considered intermediate good or service when purchased by a producer. When purchased by a producer or seller for further production. So now electricity purchased by the household, that become a final good or service. But electricity purchased by the industry, by the firms, by various types of service providers, in that case electricity is considered as intermediate goods and service. So when we are counting the GDP, we will only count at the final stage of consumption. Okay, we will not count here, because if we count on both the stages, then there will be double counting. Okay, so intermediate goods and services, intermediate goods and services are excluded in GDP calculation. Why it is excluded? To avoid double counting. Okay, so this is one of the major challenge, one of the major problem with national income accounting. When we are counting the national income, when we are counting the output, when we are counting the expenditure, there should be no double counting. So every item should be counted only once. Okay, so this way of including the value of only final goods and services will avoid double counting. Are you able to understand this, or do you need more examples for this?
Yes,
Yes, ma'am.
it is sufficient.
Yes, ma'am.
Yes, ma'am means what? Do you want more examples?
No,
No, ma'am.
No, ma'am.
No, ma'am.
Very good. So see, even
Ma'am,
if
why
you...
it is?
Why it is?
Yes, ma'am. Give more examples.
Okay, let us take some more examples. What you are saying is examples for intermediate goods. Intermediate goods and services. So first example can be electronic goods, electronic items purchased by producer or a seller. Who is producing or selling some other good. Okay. Second, banking services purchased by firms or industry. If banking services are purchased by the households, or if any financial service is purchased by the household, then it is considered to be final consumption. But when banking services are purchased by firms or industry or say university, so for university, when you will calculate the GDP from the university, then this intermediate good, that is electricity consumption or the various types of equipments which they take, so that can be classified as intermediate goods and services because they are not directly consumed by the consumer. Purchase of books is the final consumption because that is directly used. But electricity is used to run the establishment because the final product which the university is selling is something else, is the teaching, right? Or is the services to the students. So in that case, you can clearly differentiate intermediate goods and services. But there are certain firms or there are certain households who are consumers and who are producers both. So in that case, differentiating between intermediate goods or final goods sometimes becomes tricky, okay? And that is why there is always a possibility of double counting in national income accounting. Like suppose you are saying that for banks, banking service, whatever cost they incur on banking service, that becomes intermediate goods, okay? And for households, it is final goods and services. Or banks, when they provide you financial services, that is their final good or service. But for some other industries, it will become intermediates. So there is always one type of relationship between a producer and different producers. Good or service which is final for one producer or a firm may be an intermediate good or service for another firm. Okay, for electronic firm, for firm producing electronic goods, those goods and services, those goods are the final goods. But for chemical firms, electronic items are the intermediate goods. Okay, so you are calculating the output for electronic firms separately and chemical firms separately. So maybe there is a chance of double counting. Okay, so national income accounting, through considering final goods and services, always try to avoid the chances of double counting. I hope now it is clear.
Yes, ma'am.
Yes, ma'am.
Yes, ma'am. Excuse me, ma'am.
Yes, tell me.
मैम अगर हम टायर्स की कंपनी की बात करें तो मैम वहाँ पे भी तो डबल काउंटिंग के चांसेस होते हैं, तो मैम उसको हम अलग अलग काउंट कैसे करेंगे?
See, what you do is generally that for that, what you are thinking, for that we have a separate method of national income accounting. I thought I will be telling you this later because maybe that will distract your concentration. But when you say national income accounting, basically we talk about three methods of national income accounting. Then you have another method which is known as input-output method. Okay, and there is another method which is known as stock flow method. So when you have to calculate the national income, it is not only the three methods which we will be talking about, but there are several methods, and depending on the purpose, depending on the activity, depending on the sector, we choose the method of collection of data. Okay, so And generally, what we will do when we are talking about calculation or when we are talking about counting of numbers, there is always a concept like this. On one side, you have a gross value. On the other side, you have a net value. Okay. So gross includes value at every step. When you are calculating the net value, what happens is that you keep on deducting the duplication at each step. So only net value added you take. So when you take only net value added, you actually avoid the double counting. Like suppose there is a very simple example everywhere it is given. Like suppose you are producing, your final product is bread. So you start with wheat, then convert it into wheat flour, maybe, or you purchase wheat flour directly. Then you purchase sugar chemicals, sugar and other chemicals because you want to make bread. Then you purchase machines and equipments. Then you have a building. It can be shop, it can be factory, anything, or it can be a kitchen where you want to make the bread. So in this building, you will, for running this business, you need electricity, transport, and several type of services. Okay. And then you have labor. So now if you add expenditure on everything, that will give you the total cost maybe. But this total cost is not the final value. In terms of final value, what we will do is that now this is the total cost, and then there will be a price which you have fixed for bread. Okay, so when you take the price of bread, that does not include all the costs which you have incurred per unit of bread. But what you do is that wheat was 100 rupees kg. And then when you converted this into flour, it became 250 rupees kg. So 100 is included in this 250. So what you do is you do 250 minus 10. 250 minus 100. So in case of net, it remains only 150. So you don't count 250, but you count only 150. And then when you add sugar and chemicals with wheat flour, so there will be certain value of this. So suppose this value was 70. So now when you add 250 with 70, the gross value will be 100 plus 250 plus 70. But when you will take the net value, then from this 250 plus 70, so 250 plus 70 will be 320. Right? So 320 minus 250, how much you have added? You have added only 70. So you add only 70. So you keep on deducting the value of previous items, and then you get the net value. So that's how you talk about when you calculate the national income. Most of the time you are taking the net value of every good or service where you have deducted some of the values. Okay. Now let me move further because we are coming back to this again when we are talking the output method. But let us first understand this GDP.
Okay, ma'am.
So now you understand that GDP is the domestic product. Okay. There is another concept which is GNP. GNP. Now this GNP is a gross national product. Gross national product. national so gross national product means value of market value of final goods and services produced by the nationals of the country. Residents of a nation in a given year. So in this case, in case of GNP, it is not the boundary, but it is the nationals or the residents. Rest of the things remains the same, but only what is changing is now this production is by the residents. So they can be within the country, they can be outside the country. But all the production done by Indian nationals, wherever in the world, whether in India or outside, that value is included in GNP. And generally, when we define GDP and GNP, we say that GNP is equal to GDP plus net factor income from abroad. Okay. So what you do is you take the value of GDP and you take the net factor income from abroad. Why you are taking the net factor income from abroad? Factor income, you understand. The income which is earned by the factors of production, that is land, labor, capital and entrepreneur. But that is net factor income. Net factor income means there are some foreign nationals working in your country, and there are some Indians working in other countries. So Indians working in other countries will be sending their income to India. And other nationals working in the country or foreigners working in the country will be sending their money out. So there will be an inflow, there will be outflow. So you take the net of that. You deduct inflow from outflow or outflow from inflow, and that's how you get the GNP. Okay, so if there is no foreign trade, the value of GNP and GDP is equal to each other. But if there is foreign trade, if there are foreign trade and capital relationships, then GNP and GDP will differ. Okay, so the countries which are the net recipient of factor income from abroad will have a GNP greater than GDP. But countries which have a larger outflow from the country will have a larger value of GDP but a lower value of GNP. So like in case of India, our GDP is greater. Why it is greater? Because the total output taking place within the country is much larger as compared to the income which is flowing out. So inflow as compared to the income which is flowing in. Okay, but there are certain countries where income flowing, net income coming to the country from outside will be much larger. Like say, for example, any Middle East country. So in case of Middle East countries, people from outside are more as compared to their domestic production. Okay, so that's how you can see the difference between GDP and GNP. Is it clear for you? If it is not clear, not clear for anyone, if you want to understand this a bit more, you can see the video, right? It is there already on YouTube, on my channel. So you can just refer to it And if you have any doubt from there, maybe tomorrow we'll discuss that. But let us not
Ma'am,
stop here.
I have some questions, ma'am. मैम किसी कंट्री के लिए जीडीपी बेटर होगा या जीएनपी अधिक किसका होगा तो बेटर होगा कौन सा?
See, understand this, GDP or GNP is not a measure of well-being. So irrespective of whether you talk about growth of the economy on the basis of GDP or GNP, you are not talking about the welfare of the country, okay? Well-being or welfare. So it doesn't matter. But if you are thinking in terms of that how income is generated or how production is taking place, so if the level of domestic production is quite high, then GDP reflects it better. But if you have a larger dependence on export, import, and foreign countries, then GNP is better. Okay, so the advantage of GDP or GNP lies in the fact that GDP reflects the level of output within your country. So higher the level of output, higher will be the level of employment, higher will be the level of economic activities in the economy. So GDP for every country is more important generally. And most of the countries talk about their GDP. Traditionally, GNP was the most important indicator, but now recently every country talks about GDP only. So we are not talking about GNP much because understand one thing more. When you are talking about GDP, it will be dependent on the domestic currency always, because you are talking about the output within your boundary, domestic currency. Now in your case it is rupee, okay? But if you are talking about GNP, then definitely there are foreign currencies also involved. So then you have to always consider the foreign exchange. Because then there will be US nationals working for your country, or maybe your residents, the residents of India working in USA, residents of India working in European countries, then working in China, Middle East. Each country has different currency. So when you will be talking about inflow and outflow of income, you will have to use different currencies to convert that value. So this is a difficult way of talking about growth of an economy. So generally growth of an economy depends on the domestic production. That is why you are considering GDP more. But definitely those countries which are more dependent on foreign trade, like say for example USA, China, or European countries, because they export import a lot. So in that case GNP is much better. Okay, but this is just one argument. There can be several, but we are not going into that. And remember one thing, I want to remind you of one thing. Whenever you are trying to understand economics, there are two perspectives always. Okay, positive normative economics. Generally, when you frame your question, you see that there is a mistake which you are doing. You are always thinking of what is best, what is better. Now, when you are thinking about what is best, what is better, actually you are not realizing the reality. Okay? Because normative is the ideal situation. What should be, what ought to be. So generally, you have to avoid these type of questions, but keep your questions positive. how do you calculate, how do you measure, what is the definition. So that is positive economics. Don't go into what is good, what is bad, or what is required, because at this stage you are only trying to understand the concepts first. You are not trying to justify anything. So please avoid those questions. Okay. Now, when we talk about GDP or GNP, you must have seen one thing, that we are talking about the nominal value or the market value of goods and services. So actually there is one more important fact here. In GDP or GNP calculation, only market activities are included. Market activities. That means when the price is fixed through demand and supply forces, in the legal market between buyers and sellers. So you are only talking about market activities, all the activities which are conducted through market. So buying and selling or sale and purchase is taking place through the market, which is legal, okay, which is proper. So there is a price, there is a demand and supply, and buyers and sellers are meeting in the market which is legal, which is registered. So that only is included in GNP. So there are lot many things which are not included in GDP or GNP calculation. What is not included? The first thing is production or consumption of personal use. Instead of writing like this, production for self-consumption. Okay, so farmers are producing. Now, when farmers are producing, they keep a portion of their crop for their self-consumption. So that is not sold in the market. So that is not included in GNP. Similarly, all the firms producing something, if they consume on their own without purchasing through market, then again that is self-consumption, so it is not included. Second, home-based या household activities. Okay, now home-based household activities means all the activities performed by largely females or family members for their household. That is again not part of GDP. Mother or father or sister cooking food in your house, taking care of the household members, all these activities involved expenditure. They are backed by the expenditure, but they are not counted as GDP. Okay, so you are working in your own shop which is owned by your father, or shop which is owned by any of your family member. So in that case, this is a self-consumption activity. So self-consumption activity is not included at all. And there is a big argument here that why females, because females are spending more than 50% of their time in household activities, but that is not part of their GDP. That is not considered as GDP. So there is a undervaluation of activities performed by females. So that is one argument. Now, black market.
Excuse me, ma'am.
और yes, keep on.
मैम जैसे कि जो लोग घर जाके काम करते जो होममेड होती हैं तो मैम उनकी जो हाउस होल्ड एक्टिविटीज एक तरह से वो हो जाती है तो उसे जीडीपी इंक्लूड किया जाता है क्या?
See, try to understand. For any activity, if out of pocket payment is made, then that is counted for GDP. Like suppose you are hiring a person to an agency or to some market, then that activity is calculated in GDP. But generally, the maids or the housekeeping people working in your home, you don't hire them through agency. Whatever you pay to them, but they are not through any agency. So that is not counted in the GDP. It is not that it is not required to count, but the point is that you don't have a market for that where it is registered. Some person comes to your house in the morning, does several activities and go, and at the end of the month you pay. It can be a driver, it can be any other person. But if you are not hiring it through an agency, then how you will decide the price? Because that is generally through bargaining. Some people working in my household may be getting more than 5,000 rupees per month. Maybe in your household they are getting 8,000 rupees per month. So like that it can vary because there is no market. But generally when you talk about metro cities, developed countries, then you will find that each and every house helper is generally procured through an agency. In UP, you will find very less agencies working like that. You have few agencies, like if you want to keep a security guard in your house, maybe there are security firms which will give you some person. So that is through an agency. But generally, we don't keep our house helpers through an agency. So if anything which is, I told you, anything which is sold and purchased through market, all the activities performed by various types of saints, babajis, they are not market-based activity because they are all for self-consumption. Another important is black market or underground market, right? So all the black market activity. Now, how do you consider an activity to be a black market activity or a legal activity? For anything, if there is no bill, for any transaction, if there is no registration number, tax paying number, then it is really considered black market. Black market activities or underground market activities. So this is not part of the GDP. Okay?
Okay, ma'am. Thank you, ma'am.
Generally, yes.
In GDP, charity also not include.
What?
मैम जो दान होता है उससे नहीं इंक्लूड किया जाता
That's why I wrote no. I thought that you must be thinking about this only. Charity, all which you drop in the temples or you give to people sitting outside the temples. Whatever you offer in temple, that is not part of GDP. Okay, so that is not part of the circular flow of income. It is not inside. Somewhere outside it is taking place. Okay, there are different types of organization which are working. People are member of it. They are doing activities, but they are not counted in GDP. So, on the whole, what you can say is that when you try to understand the economy, there are two things which you can again talk about. Formal economy, informal economy. So from the formal economy, when all the activities are registered, properly counted, they are legal, they are paying taxes. So that is formal economy. In most of the cases, the coaching institutes are the informal economy, are part of the informal economy because whatever they earn, they don't pay taxes, they are not registered. But there are certain coaching institutes which are registered. So you have a registration number with the local administration, with the state government, with the central government. You are studying in University of Allahabad. So this is a formal system. Okay? But you are doing home tuitions. Home tuitions are not part of GDP. Why? Because there is no formal economy here as such. There is another way to understand this. Okay, no, let me keep it here only, otherwise you will get confused. So formal economy, informal economy. So we include formal economy, but informal activities are not included. So most of the time in villages, most of the activities are informal. Because we do it for our relatives, we do it for each other, but that is not through market. So everything which is through market, only it can be part of GDP. I hope now everything is clear. Do you have any question? You are raising the hand.
No.
Okay, do I need to read the questions? Tourism service. Do I need to tell you what do you mean by what activities are considered in service and what activities are considered in goods production?
Yes,
No,
ma'am.
from your point you should be knowing this.
And there are some little someone that personalized key state in the included or not.
No, it is not. Because it is informal activity, but if you go to Haldiram's or you go to registered shops, okay, if suppose McDonald is selling you full teas, then definitely it is a formal activity and it is.
Yes, ma'am.
Almost people. Yes.
And if I had a labor from the daily Mandi market, it is considered part of GDP.
Because generally these labor markets are not registered. Whatever exists in your city, they are not the registered market. Registered labor market means that there is a proper exchange where people are registered, where you apply. We have an employment office, okay? Employment bureau. So all those who are registered with the employment bureau of the particular agency providing labor services, like suppose people go to Middle East countries. So there are agencies which work for the migration of labor to Middle East countries. Then that is registered. So that becomes a part of it. But generally the labor market which you have, these are informal labor markets.
If I had a service from the company, it will be considered to GDP.
Yes, only then when it is registered.
Okay.
You purchase and sell land. Like people sell land without any proper registration. You say that now you are a contractor or you are a real estate agent. So how you are a real estate agent? If you are not registered with the government, then you are working as underground economy. So your activity is not considered. Only if you are a registered firm, if you have to produce or if you have to sell anything, you have to register yourself, then only you can be part of GDP.
Ma'am,
Yes.
ma'am, what is difference between GDP and growth rate of GDP?
Very simple. Okay. So now I am done with the class. Okay. Anyone who has another class, they can leave the class. You are saying there are two things. Keep on speaking. No? Why you are worried about that? I'm listening.
Ma'am, the